Hey everyone, good morning. It's Rob Foglia and Jessica Klein here with Foglia Properties, and we wanted to come to you live today and take a little bit of somewhat of a detour from what we've been doing recently when we're talking about just the market stats, and we've done a lot of forbearance and loan delinquency videos recently, and actually go into analyzing an investment property because I don't know about y'all who are watching this video, and yet there's a lot of people recently who've been talking with us saying, hey, as the economy changes and as the real estate market ends up changing, that they're going to want to jump on some real estate investments. So we want to make sure that we're doing our part to educate, because not every quote unquote good deal makes sense as a long-term buy and hold property. It may make sense as a quick flip, and that's it depends on what you want to do, basically, what your long-term goals are. But we're big advocates of buy and hold real estate, because it is basically almost a form of a retirement plan where you can achieve passive income, and it really just makes sense. And so let's jump in and chat. Does that sound good, Jessica?
Yeah, sounds good.
All right, cool. So before we even jump into anything, we just wanted to bring this up because this is actually an article that was written about 2 weeks ago here on Housing Wire, just talking about how mortgage delinquency rates are climbing, how forbearances are rising, and there are a lot of different there's a lot of varying information about forbearances that are out there, and it may not be the end of the world. It could be for some, so we don't want to downplay it. And at the same time, when we're seeing delinquency rates just rise as much as they are, there's no doubt that it's going to create some investment opportunities here in 3 months, 6 months, maybe 12 months from now. And so it just makes sense to get a handle on, what's a good rental property. So we go ahead.
I was going to say, just like you said, it is going to create some investment opportunities for those people, because like you said, there are people out there who are going delinquent, and maybe some people have multiple homes and they're going to sell, with the primary focus on selling quickly, and that might produce some opportunities. But just like this title says, these forbearances, which are delays in your payments, are being counted as delinquent mortgages as well. So we have to take that into consideration too, that some of these people are going to be just fine and make it through their forbearance and go back to paying normally.
Yeah, some will. Oh, so I got some feedback there. Some will definitely, and at the same time, not everybody will. We're kidding ourselves if we're saying, come 60 days from now, 90 days from now, that everything's going to be just as it was, in the middle of 2019, or the hottest market we've seen here in Middle Tennessee in 2017 and into 2018. Like there's no way that it's going to be that way in 2020. It's things are changing, the economy's changing. And so it's smart that we're planning ahead, especially for anybody who wants to invest in real estate, because it's not, real estate investing is not something you can just wake up one day and say, hey, I'm going to buy my first rental property today. Like, you've got to save up, you've got to have a down payment. There's a lot of things that go into it. And so one thing that at least I've found to be successful, not only in being a real estate investor and owning some rental properties, but also in counseling our investor clients, it's that you can do a couple things at once, meaning you can, while you're saving for your down payment, you can be starting to analyze properties. Even if you're not going out to look at them, you can start to pull things up, whether it's on our KW app or on the HomeSnap app. You can start to pull up properties and then start to say, well, all right, this is priced at this. What's the rental rate? Oh, would it make sense? And start to just play around with the numbers to see if things would work for you. So
and figuring out what it means for something to work for you. And we have this in other programs that we do, the investment seminars and videos. And you have to have your criteria, and I don't think you can figure out your criteria without practicing and seeing what's actually out there.
Absolutely, great. Well said, Jessica. Because you're right. There are, like, I'm sure. What's the most common answer to what an investor says when we say, "Oh, what are you looking for?"
I'm looking for a good deal.
Yeah, exactly, a good deal.
Word for word every time.
Exactly, and and a good deal looks different to everybody. So we're joking, of course, when we say the good deal part, because it's going to look different for everybody. And so it's important that you're able to clarify what your good deal is. Is it a single family home, a duplex, a larger multifamily property? How many bedrooms, bathrooms? Where do you want it to be? Like, there's so many factors that go into it. And so we've got one actually pulled up here. It's actually a small little house in Clarksville that we stumbled upon the other day when we were talking with a client of ours who's looking to buy their first investment property. And these clients, they were actually thinking, well, hey, let's look for a multifamily home. Let's look for a duplex, because their thought was it's going to cash flow at a higher rate than a single family home. And stumbled upon this one. I just wanted to share this one with you as to why it may make sense as an investment if it fits your criteria. As you can see, it's a 3-bed, 1-bath, it's 1,000 square feet. Overall, it looks to be basically rent ready, or, you know, a term that we talk about sometimes is turnkey. You know, just looking at it from here, it doesn't look like there's a ton that needs to be done to the property. You may need to, you know, if it's my rental, I'm gonna place a washer and dryer in there. If it's my rental, I'm gonna put a fridge in here as well. You know, looks like that's where it should be going, and so looks like it may need a stove as well. Actually, maybe for the stove, but either way, I'm gonna make sure that it's got those appliances. So it needs a little bit of a little bit of things here or there, but nothing too crazy. It's painted, looks like new flooring. It looks like it's ready to go. And so the reason this one jumped out to us is that, you know, from a very general standpoint, like before, at least for me, before I go even look at a rental property that I'm thinking about buying, I'm gonna first run through and see if it meets the 1% rule, which basically just means, will the monthly rental income, like so the monthly rental rate, will that equal or exceed 1% of the purchase price? This right here, they're asking $80,000. 1% is $800. The listing agent for this property is thinking that it'll rent for between $850 and $950 a month. That sounds about right, honestly, for a 3-bed, 1-bath, you know, in Clarksville, something along these lines. It could be a hair on the high side, but even if the 850 is on the high side, maybe it should be 800. Well, that's right at 1%. So it starts to at least check that box, because that's a box that's part of my criteria. Does that make sense?
Yeah, that makes perfect sense. And then one thing to note, I mean, how do you just know that something is approximately the right rent? Like when you see 850 and 950, how is it that you've decided that sounds about right?
Oh, great question. So part of that's from experience. So, you know, we've got a property. It's not too far from here. It's a duplex. The 2 units, each are 2-bed, 1-bath. They're getting right around $700 a month right now. So, you know, just thinking that extra bedroom, it's about 300 square feet larger than each unit that we have. You know, it makes me think that it's definitely gonna be more than 700. This seems a little high to me, only like the 950, and I'm not saying that it is. I haven't honestly run the rental comps on this one, and yet I'm thinking to myself, it's been on the market for a couple of months, you know, or close to 2 months now. If it was truly $950 a month and $80,000 for a sales price, that's too good of a deal. Somebody would have snapped this one up already. So yeah. Those 2 factors play into it for me.
And I mean, what I'm hearing you say is that you've seen properties out there, you've looked at a bunch of rentals, you have rentals, like you have experience looking at and analyzing properties, whether you've purchased them or not. And that's the key to what we're talking about here is, you know, start looking now so that you can have that experience when you're ready to buy.
Yeah, exactly. Because even if say you're making the decision now, like say you're in the camp of, well, I think 6 months from now, the real estate market's going to turn. The economy is just not going to recover right away. It's going to take a minute. Like this is the next recession for our economy. Like if that's your mindset, obviously nobody knows. I mean, we can all think and look at signs like we were just looking at with the mortgage delinquency rates and the unemployment rates and forecast what we believe may happen, but nobody knows. So, I mean, you know, if you're in that camp though, and you think there's going to be opportunity, well, that just means that, you know, start getting that experience now. And even if that means you're pulling properties like this up on our KW app or on HomeSnap, and then, you know, also then going on, you know, like one thing that I started doing when I started learning what rental rates were, aside from a couple of websites that are out there, like I think it's Rentometer or Rentometer, that you can plug in an address and how many bedrooms, and it'll give you a kind of a wide range, but it'll let you know about what the rent should be. I also used to go to like apartment websites, like I don't know, it was probably apartments.com and things along those lines, and started searching for a 3-bed apartment, you know, in Clarksville or in Murfreesboro or wherever the rental was that I'm analyzing. And I'd start to say, all right, well, a 3-bedroom apartment is renting for this. You know, that's a good sign that all of a sudden tells me that, all right, so just say hypothetically, a 3-bedroom apartment in Clarksville is renting for $900 a month or $1,000 a month. Well, that tells me something like this is probably in line, you know? So does that make sense?
Yeah.
And then, so I want to look at one other thing real quick as we're analyzing, because we're doing a very surface, analysis of this right now. Because this is the first step. The next step is to actually go see the property. Like, I haven't seen this in person. We could walk into this home and the pictures may make it look better than it actually is. So I'm not saying go buy this home and it's gonna make you a fortune. Obviously, if you want to know more about it, contact us. We're here to help. But we look at what a mortgage is actually going to look like on this property. So I've actually already done the calculation here. This is just from a mortgagecalculator.org. And what we did was plugged in the asking price, putting 20% down. I plugged in 4.5% for an interest rate. We're not lenders. We can't quote you on a rate. However, for investment properties, they tend to be a little higher than par rates. And last time I had somebody get pre-approved, they were in the low threes. So for a 30-year fix. So we just figured let's throw in about a 4.5% rate. If it was a little higher, it's going to impact the payment by a little bit, not by much, especially at this price. But we plugged in our taxes. Property taxes on this property, as you can see here, are super low. I mean, less than $500 a year for property taxes is amazing. That's great. And you just plugged in an estimated homeowner's insurance amount of $800. Could be a little less, could be a little more. Again, that's not going to make or break a home. If it's $1,000 a year instead of $800, I mean, that's less than $20 a month difference. Especially when we see that the total monthly payment we're looking at is $430. So I mean, even if rent ends up being somewhere in this range and it ends up being $850, that's a solid rate of return. I mean, you're basically double. Basically half of what you're getting in rent every month is pure profit. Now, of course, there's other expenses that go into owning rental property, which we're not going to get into today. Things like, having a property manager if you choose to hire one, putting money aside for vacancy and repair, like all those things need to be taken into consideration. And yet this is a phenomenal start for a rental.
Yeah, absolutely. I think that's great. I mean, really for many investment properties and the price range that people look at, $400 a month is a pretty good return.
Absolutely.
And in this case, it just happens to be twice what you're contributing.
Well, absolutely. And that's another reason why this one is attractive to me, because you're absolutely right. If you're looking, I guess, let me back up for a second. Like, there are a lot of homeowners that we'll talk to that think about renting out their home. In fact, I talked to a gentleman yesterday where he's attempting to sell his home right now. He's trying to sell it by owner. He's asking roughly $300,000 for his property. And, he's thinking, well, maybe I'd rent it out. Maybe I'll hire an agent and sell it. Like, he's still figuring out a lot of these, the answers to his questions, I guess you could say. However, he even said, if I rent it out, I'm going to be able to get $2,000 a month, which isn't, he's in a blessed position where he actually owns his home free and clear. So, it's going to be a solid rate of return for him because he doesn't have many expenses. And yet at the same time, dollar for dollar, it's not meeting the 1% rule. There's a lot of different things. If you were getting a mortgage on that property, and putting 20% down on that, you're probably looking at a $1,600 a month mortgage. Maybe even a little bit high, but somewhere in that range. Maybe just say $1,500. So back to what you said a second ago, Jessica, like in that scenario, if you're paying $1,500 in a mortgage, you're getting $2,000 a month in rent, you're making $500, and yet you've got a lot more money on the line. You've got a lot larger of an investment to pull in $500 a month compared to what this is, compared to
Right.
a $16,000 down payment if you're putting 20% down to see the $400 a month coming in.
Yeah, I mean, you would probably end up coming in with $80,000 on that $300,000 property rather than, coming in with almost essentially nothing,
Absolutely, yeah. If you were financing it, absolutely, you'd be putting, I don't know, quick mental math. What is that? 20% of 30 grand. That's what, 70,000, something like that. So I mean, you're looking at about $60,000, $70,000 in a down payment for a rental property
For the
same return. Yeah. And so just different ways to analyze it. And that's the biggest reason why we wanted to share this property with y'all today, as well as to just bring that 1% rule up to you today, and just to look at everything with you today, because ultimately, as the market does change, and there's no way to deny it is changing a little bit, it's going to be very, very tempting to start investing in real estate, which we should do. I mean, I'm a big proponent of real estate investments. I think when done right, it can make it super wealthy, and on top of that, it can just help you achieve some great passive income. And at the same time, they've got to be the right investments. You know, they've got to be made, you know, with a very logical mind. It can't just be, oh, the house is in great shape, or it's nice paint, or I love the layout. No, it's gotta make sense from a dollar to dollar standpoint.
Yeah, and I think absolutely it's a learning, there is a learning curve to it. And like you said, you have to do it right. Because if you follow all of the correct steps and you do your analysis, it can be very low risk. And so it's just important to start soon with analyzing and learning, and then when you're comfortable with it, you can actually start.
Exactly. No, and that's a good way to put it. And real quick too, just to throw a couple of resources out, and we appreciate y'all checking out the video. If y'all are at all interested in this subject, aside from being able to reach out to us, like you can PM us, you can comment on the video, you can you know, call us 615-591-5665. If you're not quite there yet, and yet you want to just kind of expand your learning, expand your knowledge, check out a couple of books. I mean, I'm a big fan of some Robert Kiyosaki teachings that are out there, like Rich Dad, Poor Dad. There's also a couple of great books written through the Keller Williams library. The book Hold is a phenomenal book on the subject, as well as The Millionaire Real Estate Investor. So check those two out. You know, you know, they're actually books that we give away during our real estate investor workshops that we do to our attendees. And so we'll definitely, you know, once all this social distancing stuff is lifted, we'll get that next one planned, and hopefully we can see y'all out there too.
Yeah, absolutely.
Awesome. Do we have any questions on the live feed out of curiosity?
We do not yet.
All right, cool. Well, I think that's honestly all I've got to cover on this. Again, I think, like, if I were thinking to myself right now, this is the time to buy an investment property, which I honestly, once I came across this one, I was starting to spin the wheels, like, hey, is this something we should move forward on? At the same time, though, if this is something y'all are interested in, give us a shout. We'd love to help, because again, this is the first step. You know, the next step would be to you know, making sure that it's in a neighborhood that you want to invest in, to make sure that the property conditions in the right shape. Even if you're at the point of thinking, well, hey, is it in the neighborhood I want to invest in, and you don't even want to go look at it. Like Jessica and I, we both live in the greater Nashville area. Clarksville's a hike. I mean, for me to get there, it's about an hour and a half. You know, and at the same time, it's you can go on Google Maps. That's a little just a ninja trick, I guess I'll throw out there, that, you know, you go on Google Maps, type in the address, and go to the street view and see, you know, just see how good a condition everything is. Are there a bunch of broken down cars and driveways and, you know, things like that maybe you don't want to see in your investment property? If so, then maybe that's a sign, hey, that's not the right one. If it starts to look good, well, hey, that's another good sign. So just figured I'd throw that out there too. So I think that's all I've got, though. Is there anything that we missed that we wanted to cover?
I don't think so. I think we covered everything, and you know, we'll be watching the live feed on Rob's Facebook for a few days, and you can always find this whole playlist of market updates on YouTube as well. Awesome.
And next week we're going to be going through basically looking at the May stats, just like we did the first Friday in May, where we looked at the updated April stats, basically showing those trend lines. That's what we're going to be doing next Friday, the first Friday in June. So tune in. Next Friday, I think it's June 5th at 11 a.m. Central. Come to the Facebook page, you know, get on the Facebook Live video, check it out. You know, feel free to ask any questions. We'll be looking at Davidson County, checking out what's actually out there and what's happened in the last 30 days, what the trend lines are doing. Has the market recovered? Are we seeing it, you know, basically back to where it was in February? Or is it just kind of staying where it was in April? It's going to be very insightful, I'm sure. So I'd love to have you attend next week's video.
Yeah, absolutely.
Awesome. Well, I think that's all I've got, Jessica. So we can let them go or end the live feed. But appreciate y'all checking it out, and give us a shout if you need anything.
All right, sounds good. Bye, guys.
All right, see y'all.